for our topic for this session, it will be the general principles of taxation. So let's start by defining what is taxation. So taxation is an enforced proportionate contribution imposed upon persons, properties, businesses, rights, interests, privileges, transactions, and acts within the territorial jurisdiction of the taxing authority exercised by the legislature for a public purpose and generally payable in money. So let's try to break down this definition. First, let's discuss uh, enforced proportionate contribution. So what do we mean by enforced proportionate contribution? So whenever we say it is an enforced proportionate contribution, it means that it is only it is a part of what you have earned, or perhaps on the particular subject matter. That is what is meant with the proportionate contribution. It is only part, it is not full. When we say enforce, it is obligatory. It is obligatory. So why is it obligatory? Because it is a compulsory contribution as a means to defray the expenses of the government. Therefore, it is not discretionary. Okay, it is obligatory. It is not discretionary. Next, it is proportionate because again, it is only a part of a particular subject matter. So for example, the subject matter is a property, only a portion or the value of that property will be taxed. But generally, it is not the full amount that will be equal to the amount of your tax. So it is proportionate only as to the value. Next, it is imposed upon persons. So whenever we say persons, this means it can natural or juridical persons can be taxed. You can tax individual taxpayers or non-individual taxpayers. It is also imposed to your properties. So when we say properties, it can be either real or personal property. Real or personal property. It can also be imposed to businesses. So when we say businesses, those engaged in your trade or profession. Next, it is also imposed to your rights. So for example, rights to transmit a property, right to transmit a property, right to donate, or that is a right by virtue of succession. Next, it can be imposed to your interest. So, interest on a particular property as a co-owner or interest in a business. It can also be imposed on a privilege. So, privilege, let's say a privilege to practice a profession, privilege to transfer a property. It can also be imposed on a transaction. So, that can be a sale, etc., or any other acts. So whenever we say that we enforce a proportionate contribution, the imposition talks about the subject matter or object of taxation. Subject matter or object of taxation. And what are the subject matter or object of taxation? So that those are your persons, properties, businesses, rights, interests, privileges, transactions, and any acts. And next part of our definition is that it must be within the territorial jurisdiction of the taxing authority. So what do we mean by within the territorial jurisdiction of the taxing authority? When we say it is within the territorial jurisdiction of the taxing authority, it means that it is territorial in nature. It is territorial in nature. So in short, we can only tax this subject matter or object of taxation if ever it is within our territory. This talks about your territoriality principle or the inherent limitation of taxation of territoriality. Next, it is exercised by the legislature for public purpose. So when we say it is exercised by the legislature, it is exercised by the Congress. So normally we say that taxation is a way of the government to defray the expenses. And when we talk about the government, we have the three main branches of the government. So we have your executive, legislative, and judiciary. So the main item of the government who is in charge of taxation is your legislative. And together, we call them your Congress. Congress makes up for your Senate and House of Representative. So the legislature through our Congress will now pass tax laws to tax the subject matter or object of taxation. And normally, we use that particular item which we enforce for public purpose. And to pay that, it is generally payable in money. So how do we define your taxation? So we have here your government. Your government through Congress will impose tax on different subject matters or object of taxation. For what? Particularly for public purpose. And how is it paid? It is paid through money. Therefore, if we try to define taxation again, taxation is an enforced proportionate contribution imposed on the subject matters or objects of taxation within the territorial jurisdiction of the taxing authority. Take note, the subject matter or the object of taxation must be within our territory. And lastly, it must be for public purpose and payable in money. So that's one definition of taxation. Let's proceed to another definition of taxation. So taxation is an enforced proportional contribution from persons and property levied by lawmaking body of the state by virtue of its sovereignty for the support of the government and all public needs. Actually, this particular definition is demonstrative of the purpose of taxation. And what is the purpose of taxation? Particularly the support of to support the government, to support the government. Because if you try to look at it, the enforced proportional contribution, we already talked about that in the previous slide. Furthermore, when we talk about persons or property, again, we are talking about objects of taxation or the subject matter of taxation. What is only different in this particular definition is that it is for the support of the government and all public needs. If we try to look into the previous definition, we're talking about the usage of the tax for public purpose, which is payable in money. In this particular definition, we are focusing on the support of the government and all public needs. When we talk about public needs, that is already the public purpose. So what is new here is the support of the government or for the support of the government. Therefore, when we try to define taxation, it is also a definition based on the purpose of taxation. And what is that purpose of taxation? That is to support the government. So in this definition, our main focus is the purpose of taxation, the support of the government. So other definitions of taxation. So first, as a power. So taxation is the inherent power of the state to demand and force contribution for public purpose to support the government. So when we talk about as a power, there are three main powers or inherent power of the state. So when we say inherent power of the state, it means that it must become first a state. It is a sovereign state so that the inherent power comes to play. And what are this inherent power of the state? So there are three main inherent power of the state. As I said, first, it is eminent domain. Next, police power. Third, taxation power. Therefore, in the definition of taxation on the first part, as a power, we're talking about the taxation power as an inherent power of the state. It is an inherent power of the state to demand enforced contribution for public purpose to support the government. And you have already learned that it is an enforced contribution. Enforced contribution as a means, because again, it is compulsory. It is not discretionary. It is obligatory. In short, you are obliged to pay taxes. Next, definition of taxation as a means or process. It is the process or means by which the sovereign, through its lawmaking body, raises income to defray the necessary expenses of the government. So again, it is a means to finance the expenditures of the government by imposing charges on the different subject matter or objects of taxation. So what we do here is that we impose tax, we impose tax, and that tax is used to defray the expenses, to defray the expenses of the government. So again, we are talking about the purpose of taxation. So once we impose the burden of taxation, we use that to defray our expenses. Next, it is a mode of cost allocation. Why is it a mode of cost allocation? Because taxation is a way of apportioning the cost of government among those who in some measures are privileged to enjoy its benefit and must bear its burden. So we try to allocate the cost of the government to the different subject matter or objects of taxation. And that particular tax will now be used proportionately to defray the expenses of the government. Next one, as a price. It is an indispensable and inevitable price of civilized society. Uh, this is likened to your principle of necessity. Okay, it is likened to your principle of necessity that without the tax, of course, we don't have a civilized society. Another definition of taxation, it is an act. It is the legislative act of levying or imposing of tax to raise income for the government to defray its necessary expenses. So with all of these definitions of taxation, generally, always remember there is an enforced contribution, and that enforced contribution is imposed by the lawmaking body of the state, and the lawmaking body of the state will impose that to different subject matter of objects or objects of taxation, generally for public purpose or to defray the expenses of the government. Now, let's go to taxation as a power of the government. So we said a while back that taxation is a power of the government. Why? It is one of the inherent power of the state. So as we said before, there are three main powers or three inherent powers of the state. And what are those? First, eminent domain. Next, we have your police power. And then we also have your taxation power. So first, eminent domain. When we say eminent domain, this is the power to take private property for public use upon payment of just compensation. Private property, taking of private property upon for public use upon payment of just compensation. Generally, you know this one as the power to expropriate or your expropriation. That is your eminent domain. Next, we have your police power. Police power is the power to enact laws for promotion of general welfare. Police power, enact laws for promotion of general welfare. So generally, if the question is talking about general welfare clause, your answer there will be police power. And lastly, we have your taxation power, which we already discussed earlier. So let's try to differentiate the three. First, as to who exercises the authority or power, we start first with taxation. Although all of the three powers are inherent power of the state, therefore, as a general rule, who exercises them is the state. However, in the exception of your eminent domain, because private entities can exercise the power of eminent domain. So in short, we can delegate the power of eminent domain to private entity. Okay? We can delegate the power of eminent domain to private entity. Delegate to private entities. Next, as to necessity of delegation. So as earlier said, eminent domain can be delegated to private entities. Therefore, for taxation power, delegation is unnecessary. Police power, it can be delegated through a legislative act or through law. Why? When we say delegation, normally it is the state. However, when we say delegation, you can delegate it to, let's say, the local government or delegate it to other private entities. But for taxation, take note, it cannot be delegated. But for police power, it can be delegated. Eminent domain can be delegated. But the delegation of eminent domain extends even to private entities, but for police power, generally, it is only confined within the government. So it can be the national or local government. Next, as to purpose. The purpose of taxation is for revenue that is to be used to defray the expenses of the government. While for police power, that is for the protection or regulation for general welfare. Again, when we talk about police power, it is the promotion of general welfare of the people. Therefore, the main purpose is the general welfare of the people. Eminent domain, that is the usage of the private property for public use. Okay, for public use. But take note, you cannot just get the private property without just compensation. So, lagi niyong tandaan dito sa may eminent domain, there must be a payment of just compensation. Payment of just compensation. Next, as to the persons affected. For taxation, the persons affected are the community or the classes of individuals. So it can be the community or classes of individuals. As we said earlier, there are too many objects or subject matter of taxation. So kahit sino doon ang piliin ng government na i-tax, pwede. As long as we will discuss later, as long as it is within the limits or bounds of the limitations provided by inherent and constitutional limitations. Next, as to police power, the persons affected are community or classes of individuals again, while for eminent domain, it will be your specific person or owner of the property. So for eminent domain, the persons affected or the person affected is only the specific person, which is the owner of the property. So if we try to compare for taxation and eminent domain, it is community. Pareho sila, community. While for eminent domain, it is only the specific person. Next, effect of transfer of property rights. So upon the use of your taxation power, the property or the tax which is paid will be part of your public fund. Therefore, upon payment of the tax, it will go to our Bureau of Treasury. How about in your police power? There will be no transfer of title. It is only a restraint. It is only a restraint. While for eminent domain, there is a transfer of title. Why is there a transfer of title? Here, the property will now transfer to the government. So here, there will be a tax which will go to your government. Here, the property will be purchased by the government. Therefore, the property will transfer to the government. But for police power, there will be no transfer of title. It is more of a restraint. It is more of a restraint. So take note of that. There's transfer upon the usage of taxation and eminent domain power, while police, no. As to the amount of imposition, the amount imposed in taxation is unlimited. Why is it unlimited? It depends on the state on how much they will impose. If they will impose a 90% tax rate, we cannot do otherwise. So we must oblige to it. So it is generally unlimited depending on the legislation provided by our legislature. But for police power, it is generally sufficient to cover the cost of regulation. Therefore, there is normally limit here, which is provided pursuant to our regulations. So it is more of a licensing fee. So in taxation, we call them tax. In police power, we call them licensing fee or license or permit fee. Now, as to eminent domain, since we are taking the property for public use upon payment of just compensation, there will be no imposition. So what do we mean by no imposition? It means that we will not take anything from the generally what we take is the property, but we pay for the property. So for eminent domain, it is not really more of imposing, but we are taking. So as to the amount of imposition on eminent domain, there is no imposition, but we pay the owner of the property the fair market value of the property upon taking. So once we take that property, we need to pay. So in taxation and police power, the government receives a payment. Okay, in this too, government receives payment. While in eminent domain, the government provides payment, right? So it is the government who pays in eminent domain. In taxation and police power, it is the government who receives payment. Next, as to importance, taxation is the most important. Why? Because without taxation, the government cannot run. As we said, or as you already know, taxation is the lifeblood of the state or the government. As to the power, it is the police power who is the most superior. Why? Because again, this is more of regulation for general welfare laws. Next, we have relationship with the Constitution. Take note of this. Police and eminent is superior. Why? It can impair the Constitution. But your taxation is inferior. It cannot impair, especially the non-impairment clause. So it can override some clauses. Let's say police power and eminent domain. However, as to your taxation, it is inferior. But generally, the clause that is only the clause that is subject to the relationship here is the non-impairment clause. What is that non-impairment clause? We cannot impair the obligations and contracts entered by private persons. So if there is a law, it cannot impair whatever is already entered before that particular law. However, for taxation, it is inferior to the non-impairment, while your police power and your eminent domain is superior. As to the limitation, your taxation is, since it is inferior, it is constitutionally and inherently restricted. So there are constitutional and inherent limitations. While for police power, the main limitation is the general welfare. Therefore, we look into public interest. We look into public interest. And as to your eminent domain, the limitation is the public purpose. Why? The definition of your eminent domain power is that taking of the property for public purpose. Take note, taking of private property for public purpose. Therefore, if you will take a property not for public purpose, then what happens is that it is not a valid eminent domain or exercise of the power of eminent domain. So it must be for public purpose. So limitation of our taxation, constitution, and inherent limitation. While for police power, general welfare, that is the public interest. For Eminent domain, it is the public purpose or the use of the property. So these are the differences as to the powers of the government. So we just expounded on the taxation as a power of the government. Next, taxation as a process. Taxation as a process. So why is taxation a process? It is a process because it is composed of the stages of taxation. So what are the stages of taxation? First, we have your levy. Next, we have your assessment. Third, we have your collection. So what is your levy? Levy is also known as your imposition. Levy is also known as your imposition. It is the imposition or the enactment of tax laws. Imposition or enactment of tax law. Please differentiate levy as a stage or process versus levy as a remedy. When we talk about levy as a stage, okay, levy as a stage or process, we're talking about tax law, okay? We're talking about tax law. So the imposition or enactment of that particular tax law. When we talk about levy as a remedy, it is the taking of the property as a remedy to enforce collection of taxes. Okay, so what's the difference? In the first one, it's talking about the law itself. While as a remedy, we're talking about there's already the assessment, and then the assessment is already final, then we can collect. If we cannot collect using money, then we can collect by taking of property. So when we talk about levy as a remedy, that is the taking of property as a mode to enforce the collection of your taxes. So when we talk about levy, it is the levy of real property. Right? Levy of real property. Per taxation, levy is for real property. Next, we have your assessment. We have your assessment. When we talk about assessment, this is now the tax administration. This is now the tax administration, wherein we are now imposing we apply now the tax law to a particular taxpayer. Okay? It is now the administration of the tax law. Collection, this is now the enforcement of payment out of the particular assessment. Levy is the impact of taxation, while assessment and collection is the incidence of taxation. Okay? Levy is the impact of taxation, while assessment and collection is the incidence of taxation. Levy is tax legislation, while assessment and collection is tax administration. Levy is the tax legislation, while your assessment and collection is your tax administration. So soon, when we discuss your tax administration, we will more expound on this levy, assessment, and collection. So we are just expounding our definition of taxation a while back. So we said a while back that taxation is the process by means of is the process or means of the state through its lawmaking body to defray the expenses of the government. So when we talk about process, what composes that process? We talk about the stages of taxation. That is your levy, assessment, and collection. So levy is legislative, so that is tax legislation, while assessment and collection is administrative, that is your tax administration. So when we talk about tax legislation, we're talking about the Congress. When we talk about tax administration, we are talking already of your executive. That is your Bureau of Internal Revenue. Bureau of Internal Revenue. Okay, so levy, imposition, assessment. The tax is now imposed to your taxpayer. Collection, that is the enforcement for the payment of taxes. Next, taxation as a mode of cost allocation. Taxation as a mode of cost allocation. So we discussed a while back the principle of necessity or the theory of taxation. Now again, taxes are what we pay for a civilized society. We said that without taxes, the government cannot really operate. It cannot really affect its mandate. Therefore, it is a mode of cost allocation. So when we say about necessity, we're talking about lifeblood. We're talking about lifeblood. Why? Because without taxes, the government cannot exist. The taxes, the government without taxes, the government cannot exist. Again, no government is expected to exist without taxes. But always remember that if we're talking about lifeblood doctrine, you try also to equate it with your principle of necessity or the theory of taxation, that it is indispensable to the existence of the state, that without taxation, the state cannot operate, it cannot activate, it cannot affect its mandate. Therefore, um, when you talk about lifeblood, you try to also equate it with the necessity theory. Or when we talk about necessity theory, it is known also as the theory of taxation. Okay, because taxes is again is indispensable to the existence of the government or the state. And taxes are what we pay for a civilized society. Next, we have your benefit received theory. So whenever we talk about a benefit received theory, this is the basis of taxation. What is this basis of taxation? That because you are receiving something out of the services provided by the government, you have also the reciprocal duty to support and protect the government. So if you still remember, it is also likened to your reciprocity theory or the benefits protection theory. Benefits protection theory or reciprocity theory. Your main keywords here are the reciprocal duties, reciprocal, and mutual. Generally, these are the keywords for benefit received theory. The government and the people have reciprocal and mutual duties for support and protection. Sometimes we also call this one as the doctrine of symbiotic relationship. Doctrine of symbiotic relationship. Why again? Again, the government provides services to the people. In turn, the people pay taxes. In turn, the people pay taxes. So the people must contribute a share through the form of taxes. Next, ability to pay theory. Ability to pay theory. So again, tax payments must be based on the ability of the taxpayers to pay. Tax payments must be based on the ability of taxpayers to pay. Ability of taxpayer to pay taxes. Okay, so again, whenever we talk about theory of taxation, we're talking about lifeblood. Theory of taxation. When we're talking about basis of taxation, we have your benefits received theory. But all of this is expounded on our definition of taxation as a mode of cost allocation. Why again? We go back on our definition. Taxation as a mode of cost allocation. It is a way of apportioning the cost of the government. And how do we apportion the cost of the government? Generally, that is based on benefit received theory, that since the people receives benefits coming from the government, the people in turn must pay taxes to defray the expenses of the government. So this is the reciprocal and mutual duty of the government and the people. It is also based on the ability to pay theory. Why? If we will allocate our taxes, we look into the ability of the taxpayer to pay taxes. And finally, the main consideration in the cost allocation is the lifeblood doctrine. Because again, without the taxes, the government cannot operate. So we anchor the definition of your taxation as a mode of cost allocation based on lifeblood doctrine, benefit received theory, and ability to pay theory. Just as we anchor a while back the definition of taxation as a process, we anchor it over the stages of taxation, levy, assessment, and collection. Now, let's go to your purposes of taxation. So what are the purposes of taxation? So the first purpose of taxation is, or the primary purpose of taxation is to promote or to raise revenue to promote general welfare and protection of its citizen. We have already discussed this earlier. The main purpose really is for public purpose. And when we talk about public purpose, that is the general welfare and the protection of the citizens. And why is it raising revenue? Again, we use this to defray the expenses, okay? To defray the expenses. And what are the expenses? The expenses for public purpose. Next, let's look into the secondary purposes of taxation. So the secondary purpose of taxation is first, regulatory purpose. Regulatory purpose. So what do we mean whenever we say regulatory purpose? So it's a means of regulation or as a means to exercise the police power. Why so? Because again, you can use taxation as an implement of the police power. You can use taxation as an implement, of police power. In short, we can use taxation for purposes of regulation. Next, we have a compensatory purpose. For compensatory purpose, this is to provide some sort of compensation for our activity. So, for example, we try to impose higher taxes on alcohol, cigarettes, or imposing sin taxes to sin products. And this portion of this will be used for health purposes. So it is a compensatory purpose. Why again? There are sin taxes to sin products, and we use the taxes collected on these sin products for health purposes. So we tax something to compensate for health purposes. Next, the promotion of general welfare. So in promotion of general welfare, again, as an implement of police power. So we try to enact law, which now try to regulate, let's say, the usage of cars. So we impose higher taxes so that only few persons can afford buying cars. Thereby, you can increase the usage of public transportation, which now could promote the general welfare of the people. So if ever we rely most on public transport, it means that we must also improve our public transport. So the enactment of the law to tax higher the vehicles or the purchases of automobiles, therefore, in effect, it could help the promotion of general welfare. Another secondary purpose, the reduction of social inequality. So when we say social inequality, we try to balance. So those who earn more are taxed more. Those who earn less is taxed less. So that is again based on the ability to pay theory. That's why we also use progressive system of taxation. Normally, you can see this one through the use of progressive system of taxation. Why? Because if your income is higher, you are taxed higher. But if your income is on the lower bracket, then you are taxed lower. Next, encourage economic growth by granting incentives and exemption. I don't know if ever you feel this one, but I think there's a mismatch on the giving of incentives because we are trying to open up our market, but in opening up the market, we open it now to foreign investors rather than purely Filipinos. So most of our incentives now are for foreign exports, etc., or trying to invite foreign entities here in the Philippines to at least provide jobs or etc. to alleviate our economic problems. However, I think that's a misplace or mismatch as to the provision of taxation. But anyway, that's part of legislature. But just remember, that's one of the secondary purposes to encourage economic growth by giving incentives and exemptions. Furthermore, another purpose is to promote or protect local industries from foreign competition, wherein we try to tax the foreign competitors higher than local industries. But as I've said, we try to open up our economy to foreign investors. Thereby, most now there's a mismatch because actually some of the foreign investors who go to economic zones are provided lower incentives compared to our local industries. Therefore, I think there's a problem regarding 5 and 6 as to the secondary purposes. But anyway, still, it's the purpose of taxation, trying to encourage economic growth and to protect local industries. Now let's go to the nature of taxation. So the first nature of taxation is the inherent power of the state. We have learned this already, that taxation power is an inherent power of the state. Next, along with the other inherent power of the state, which is eminent domain and police power. Next, taxation is exclusively lodged to the legislative. When we talk about legislative here, this is your Congress. By the way, Congress has the power of the purse. So what do we mean by the power of the purse? They can collect taxes, and based on the collection of the taxes, they provide budget. So it's up to them on how do they collect the taxes and try to allocate budget based on that collection. Next, it is subject to limitations. We said it is subject to inherent and constitutional limitations. Fourth, it is not a contract between the state and its citizens because the obligation here is based on the law. The obligation is based on the law. Next, it is not political in nature. So when we say it is not political in nature, it means that even if there's a change in the politics or whoever manages the Philippines, taxes will still be imposed. Lastly, it is non-delegable. It is only within the power of the legislature. Sir, what is the example of it is not political in nature? So when we say it is not political in nature, it means that halimbawa, sinakop tayo ng China, mag-stop ba yung taxes? Hindi. kahit magbago pa yung whoever runs the Philippines, kahit magbago pa yung presidente, magbago kung sino yung namamahala sa Pilipinas, magbabayad pa rin tayo ng tax. So that is, it is not political in nature. Other fundamental doctrines in taxation. So first, we have your Marshall Doctrine. So what is your Marshall Doctrine? The power to tax includes the power to destroy. Sino nagsabi nito? Actually, ang nagsabi nito ay isang US Justice, si Justice John Marshall. So it was provided in one of the decisions of Justice John Marshall that the power to tax includes the power to destroy. When we say it includes the power to destroy, it means to prohibit something. We said power of taxation can be used to implement regulation. Therefore, you can use taxation to prohibit something. So again, it is only allowed. So whenever we say power to destroy, it means prohibition only. When we say prohibition, it's more of regulation. But if ever it is to confiscate or to destroy, that is not valid. Again, the power to tax includes the power to destroy. So when we say power to destroy, it is only prohibition or regulation. So again, we are just implementing police power. So we use taxation to implement police power. That is valid. But if ever we use taxation to confiscate or destroy properties, then that is valid. So that is invalid. So valid if ever prohibition or regulation, invalid if ever it is confiscation. Invalid if ever it is confiscation. Sir, why is it invalid if ever it is confiscation? Because again, taxation is only used as an implement of police power. It is not police power itself. Do you still remember a while back when we tried to differentiate police power and taxation? Let's go back. In your police power and taxation a while back, we said that here, as to the purpose, the purpose here is revenue, and here it is protection or regulation. As to the effect, we get the property for use as a fund. But for police power, it is more of restraint. And how do we restrain? By confiscating the property. Confiscating the property. Remember that. So if we try to go back in the definition or in the other theories provided by Marshall, which is the power to destroy, what we mean in the power to destroy here is only regulation or prohibition as an implement of police power. We cannot use police power itself. Why? You are already overlapping different powers of the state. So kung taxation lang, hindi pwedeng pati police power. Kaya kung purely confiscation yan, hindi pwede siya. So it is valid if ever you use the power to tax to prohibit, but not confiscate. Take note of that. Based on the decision provided by Justice John Marshall. Next, we have your Holmes Doctrine. So in your Holmes Doctrine, again, this came from a US justice. And who is that justice? That is Justice Oliver Holmes. Oliver Holmes. Okay. So for Justice Oliver Holmes, taxation power is the power to build. The power to tax is not the power to destroy while the court sits. So what do we mean by taxation power? It's the power to build. Generally, we said a while back that one of the purposes of taxation is to promote local industries, to give incentives, etc. So therefore, when we talk about taxation, it could also encourage something. So out of our tax laws, it could encourage investors, it could encourage our local industries, it could encourage economic growth. So it is the power to build. However, Justice Holmes also said that the power to tax is not the power to destroy while this court sits. It means that the power to tax now is it has a consequence to destroy property. In short, it could confiscate property. However, in the confiscation, as long as the court sits, it could balance that. It could balance that confiscation. Next, we have your doctrine of judicial or doctrine of judicial non-interference. So the court cannot inquire into the wisdom of a taxing act or the advisability or expediency of a tax. Okay, we call this one political question. What is this political question? When we say political question, so generally, the government is divided into three main branches. As we said, we have legislative, we have judiciary, and we have executive. When we say political question, it means that if ever it is part of one particular item of the government, let's say the power belongs only to legislative, the power belongs only to executive, the other branches cannot question the act of the other branch. So in short, if the legislative will pass a tax law, the other branches cannot question the wisdom of the tax law. The other branches cannot question the wisdom. Again, we're talking only about the wisdom. But if ever it infringes on other constitutional limitations, then therefore the judiciary can interfere on the legislative. But if ever they are trying now to impose a tax, let's say legislative is imposing a tax, there's a they are creating a tax law, etc. But if ever it is within the constitutional grants of our constitution, then no problem. But if ever there's a problem on the other limitations, it infringes on our constitution, doon lang pwede si judiciary. Pero kung wisdom nung tax law, hindi pwede. That is your doctrine of judicial non-interference. So halimbawa, sa executive rin, may ginawa si presidente and it is within the power of the president. Pwede bang awayin ni judiciary si president? Hindi rin. Kasi nga, it is a political question. If we're talking about wisdom on how the legislative works, how the executive works, how the judiciary works, you cannot interfere because it is within the political question doctrine. Or per taxation, for MCQs, we call that doctrine of judicial non-interference. Next, or other fundamental doctrines, we have here your imprescriptibility. Taxes are imprescriptible unless the law itself provides for such prescription. So as a general rule, it should not prescribe. However, our tax law provide for prescription now. It could be 3 years or 10 years, depending on the type of taxes or depending on the violation. Next, we have here your prospectivity. Tax laws are prospective in character and application. Tax laws are prospective in character and application. So for example, we have now a tax law. So, okay. So let's make use of an example. So let's say previously our percentage taxes is 1%, and then bumalik siya ng 3%. So yung 3% na yan, i-apply mo lang siya prospectively. You cannot apply it in the previous quarters. So if ever 3% na siya ngayon, edi apply mo lang siya prospective. Ano pa ba? Yung sa educational institution, ano yung meron sa educational institution? Ano yung rate nila before? Ang rate nila before ay 1%, right? 1%. Before, on or before July 1, 2023. And then, fast forward July 1, 2023, we use now 10%. So, if ever we are talking about prospectivity, let's say you are not using a calendar period. In short, you're not following the normal quarters na January to March, April to June, July to August. Okay? July to August, so July to September. Okay? So you're not using the normal quarters. What would be the problem here? How will you apply it prospectively? So let's say, for example, you are using a fiscal period. What is your fiscal period? You have a fiscal period of June, July, and August. You have a fiscal period of June, July, and August. Now, what is your percentage then? Okay, again, our example, educational institutions on or before July 1, 2023, 1%. After after July 1, 2023, 10%. So how do we apply that? How do we apply that? Assuming it is fiscal. For June, what is the percentage? 1%. July and August, what is the percentage? 10%. Therefore, if you will now file a quarterly tax return, what is your percentage? 1% times 1 over 3 and 10% times 2 over 3. So your percentage will be, kung ano man yung sagot dyan, yun yung sagot natin. Ganun siya. Prospective in character. Kahit nung corporate taxation ninyo na 20% tapos 25%, ganun, and then kailangan mo ng annual, kukuha ka ng average mo. Kuha ka na lang ng average mo. So, or 20 to 30%, mga ganun. Kukunin mo yung average mo kasi nga prospective siya. So for example, January to June, the rate is 20%. And then July to December, the rate is 30%. How will you tax the annual tax return? Can you use 30%? No, because January to June was 20 and July to December was 30. So what will you do? You try to prorate it because again, tax laws are prospective in character. So 20% times 6 over 12, 30% times 6 over 12. That is the concept of prospectivity. Next, we have the concept of estoppel. We have the concept of estoppel. So what do we mean by estoppel? The state cannot be estopped by the neglect, errors, or mistakes of its agents or officers. So what do we mean by this? So if ever your public officials improperly assess you, can you take it against the state? No, you cannot take it against the state because of doctrine of estoppel. Therefore, the doctrine of estoppel operates only against the taxpayer. Against the taxpayer. So for example, sir, what do we mean by that? Taxpayer, by claim siya against the government. Can the taxpayer may claim siya kay government? Pwede bang sabihin ni government na estoppel si taxpayer? Yes, pwede yan. Why? Because doctrine of estoppel operates against the taxpayer. But if ever, si government naman ngayon ang may claim kay taxpayer, can taxpayer claim estoppel? In short, can the taxpayer prohibit the collection of taxes against the government by virtue of the errors or mistakes of its agents or officers? No. Why? It cannot operate against the taxpayer. Hindi pwedeng gamitin ni taxpayer against kay government. Pwede lang if ever sasabihin ni government kay taxpayer yun. Tandaan nyo yan, ha? You cannot stop the government. Only the government can use the concept of doctrine of estoppel. Next, doctrine of equitable recoupment. What is this doctrine of equitable recoupment? This is the doctrine of no prescription. It is based on the principle that the government shall not enrich itself at the expense of taxpayers. This doctrine of equitable recoupment is not applicable here in the Philippines. But normally, lumalabas kasi siya sa theory. So if ever, you just try to familiarize yourself with doctrine of equitable recoupment. Next, we have your non-compensation or set-off. The government and taxpayers are not the creditor and debtor of each other. Therefore, you cannot make use of compensation or set-off to extinguish the liability. If you still remember, compensation or set-off is one of the modes of extinguishing a liability or an obligation. However, since there is a difference as to the source of an obligation, why? For the tax, tax is based on law. Okay, tax is based on law. Therefore, generally, the people does not have or cannot be a creditor based on law. So since there is a difference as to the source of the obligation, we cannot compensate or set off the obligation. So eto yun. Taxes are not in the nature of contracts between the parties, but grew out arising from law, hence they cannot be set off. So if ever the taxpayer has a claim against the government, generally you cannot set it off. You cannot set it off. But we have now the concept of tax memo or certificate, tax memo or certificate, and we use this tax memo or certificate to pay off our taxes. So generally, there's non-compensation or set-off because again, you cannot extinguish the obligation here because there is a differing source of obligation. Taxes comes from law, while for taxpayer, generally it comes from contract. So you cannot set it off. So, however, the government provided for a tax memo or certificate. So you can now try to set off your tax liabilities in the form of this tax credit certificate. In the form of this tax credit certificate. Okay,